What's the biggest contributor for your own financial success?
I mean, the highest hourly rate is definitely investing. I think I like investing is, if you're a professional investor, the craziest business model in the world. If you raise money from other people, because you're just getting leverage on other people's money to go and do something. Like if you think about the hourly rate on certain investments, like I have an investment that I made where I put $25,000 into something. This was actually just personal, and I think it'll end up making me multiple millions of dollars based on what this company is doing and what the outcome is going to be. That decision was made in 10 minutes. The hourly rate on those kind of decisions is extraordinary. That's why, by the way, like there's so many people out there that do like little day trading on the side. And my hot take on this is like, unless this is your full-time job, you should never be trying to outperform the market. And people go crazy when you say that because they're like, well, I made 200% last year. I did this and that. If you can outperform the market consistently, please stop what you're doing on your day trading. Go raise a hedge fund and let me invest in it, because it is so rare that anyone can outperform the market. It just doesn't happen.
So do you just flat out not believe any like Forex trader, any day trader, swing trader that says, oh yeah, I beat the market?
No, I don't not believe them. I don't think they can do it consistently over a long period of time.
What's a long period of time?
5+ years.
So what do you think about people?
I'm sure there are a few people out there that have done that. There's always exceptions. But if you are doing that and you are legitimately doing this consistently, if you do not go raise a hedge fund, you are an idiot.
So my understanding, their defense towards that would be you just can't do it with large sums of money, because you have people that are day traders with alleged, or like they claim they have bankrolls of $20 million, but they only regularly trade with like 150, 200K, because the more money you're putting in, for some reason it's not like
it starts moving the markets. Like you make a $2 million investment,
especially if you're trading on like smaller cap
maybe if you're
stocks,
trading in like tiny things that aren't liquid, maybe that might be true. But like people that say that they like swing trade the S&P 500 futures and consistently outperform the market, I'm like, please go raise a hedge fund, because you will be a billionaire.
What about Forex?
I don't know enough about Forex. I mean, I'm like, these are efficient markets, man. There are people whose entire job, smartest people in the world, allegedly, whose entire job is to outperform markets. And a basket of hedge funds did not outperform the S&P 500 index.
I always find it funny that there are professionals out there who spend their entire lives, decades, doing this. And meanwhile, you see some 19-year-old who's saying, oh, I found a way to consistently make money in Forex, and I'm going to teach you how to do it. I just don't see it.
Well, I'm going to teach you how to do it. He's going to make his money by selling you a course on how to do it, not by actually doing it. If someone can outperform the market, the best way for them to monetize that unique, extraordinary skill is to raise $1 billion of someone else's money and go and do it, because the performance fees you're going to make on being able to do it are astronomical. It's the reason why Ken Griffin has, a like $100 million penthouse on the top of Manhattan. It's the reason Bill Ackman is worth $10+ billion. Like, if you can outperform the market and you have this unique skill, please go raise a hedge fund.
So what's interesting is that it seems like the new thing is these prop firms that are popping up. And what this is that you could go and you pay a fee to trade with a certain amount of money. And once you prove yourselves on these platforms, then they'll say, oh, we'll give you $5,000 to trade on our behalf once you've consistently made 8 to 10% a month.
It's not really that new. It's been around, and it's interesting. It's a very interesting model, and it's also one that recently has been getting a lot of press, because there are hedge funds that have like tip lines where they will pay you for giving them trade ideas. And what's been happening is that there are some enterprising people out there who basically are going and digging up inside information on deals or on stocks and submitting it to hedge funds, getting paid for it. And it's this weird legal gray area where like the hedge fund didn't know that it was insider info. They could just say like, oh, that was a good trade idea that someone sent in. But like, obviously, if there's some random guy from Bulgaria consistently sending you these trade ideas on some esoteric stock and you're like making absurd amounts of money on this, clearly something was like the guy had access to like some truck driver that knew the inventory levels, whatever. But it's this weird like legal gray zone that's happening.
Yeah,
in the
what's
hedge
crazy
fund
for me
world.
are the short sellers, where you could basically go and write this hit piece on a company and say at the bottom, you just disclose, we have a short position in this and we financially benefit with the stock price going down. But they're able to make whatever alleged claims they want, drive the stock price down, profit from shorting the stock, and then exit.
How is that any different than an investor going on CNBC and saying whatever they want about the upside of a stock and trying to pump it up?
I think it's totally fine as long as you disclose your position and bias. So I could say, hey, I love this little small cap stock. Oh, by the way, 90% of my portfolio is in this. It makes up, X amount of dollars. And this is my bias. I think as long as you're forthright about your financial interest and saying whatever, then I'm open to it.
I feel like they both. Short sellers get a really bad rep in the market, but they provide an actual like important service to a market that there's pressure down on stocks as well, and there's people selling and sharing information on the downsides of these assets. Like I just think all of these things are helpful for market liquidity in the long run as well. But I do think the worst version of all of this was the SPACs. It's like there was no boundaries on what you could say about the future earnings of these companies because you were able to like project these companies outward, which you're not allowed to do if you're filing a normal S1 prospectus for like a traditional IPO. And so that got abused badly, right? Like people were just, and everyone, it was the ZERP era, right? So like everyone wanted to buy into these crazy financial projections for these companies that fundamentally their business model, they just lost money on every transaction and there was no pathway to making margin. And, a lot of retail investors got destroyed by that.
So where have you lost money?
In too many places. I've lost money on the vast majority of startup investments, right? Like startup investing, I think startup investing is like the sexiest thing that actually makes objectively no sense to do. I mentioned Figure. That's a great one. Obviously, that'll be a great outcome. That is going to cover the losses on like 80% of the other things that I've invested in as an angel investor or with my venture fund. Because look, like you're speculating on things that are ideas at the start. You're basically betting on a person that they're going to be able to figure it out. Markets change, things change. The vast majority of them won't become successful. And even if they do become successful, it's pretty rare that they end up getting to an outcome where they exit or they go public, where you actually get liquid on the money. And so, I've lost money on the vast majority of this. I've also, as a rule, anytime I've tried to have a hack or a shortcut, I've gotten punched in the face. What I mean by that is like, anytime I thought to myself, oh, I could make this much money this fast, I got destroyed on the thing. Like
so
whether
what are a couple like
NFTs got just
how much did you lose on NFTs?
hundreds of thousands of dollars.
Oh, what'd you buy?
I had to pay taxes because I
Oh, you were trading them?
Yeah.
Oh.
Yeah. Like I got wrecked on NFTs. The only thing that, again, to the example of like one good thing offsetting, I've done very well on Bitcoin because I bought it a long time ago and have just never sold it and held it. And every single other crypto thing, any other crypto tokens and NFTs, I've gotten destroyed on, but it's all made up for by this one buy and hold long-term thing. So now my new rule is I don't do any trading.
So how much better off would you be had you just bought the S&P 500 instead of all of these alternative investments, spreading your portfolio across NFTs, Bitcoin, altcoins, private equity, etc.?
I would not be better off only because I had access to a few very unique things by virtue of like the networks that got created through these investments. So like when you think about an investment, there's a few things to consider. There's the financial returns, just purely on the surface. Then there's like the amount of time you're going to have to invest into this thing. And then there's what other value you might get from being involved in this. And so, money is very easy. Like you're like, here, how much money am I pushing into the center of the table for this investment? The time is one people often forget. Like if I'm investing in multifamily real estate and I'm going to actively manage it, there's a whole lot of headaches associated with that. I have to factor that in because that's real money that I'm putting in the form of time. The last piece is really heavily skewed towards like in the angel investing or in private equity. When you invest in a deal, you're also going to have access to like the room, the room where it happens on this stuff. So like being involved in a specific deal might be a bad financial investment for that one deal. But if it gets me access to a whole bunch of really smart people that are then going to do more deals, that actually might be a long-term positive move to go and do that.